Hey there, welcome back to Income Nomad channel, your channel, where I help you to become a professional trader in the financial markets, plus more. This is the second part of the candlestick pattern, so if you haven't checked my previous videos, please go check them out first. These are mandatory to be watched right after each other, because these are a series. You have to watch them one by one. Do not hesitate to practice each and every individual session while it's finished, because if you don't, after 1 to 3 sessions, you're going to be confused and you're going to forget a lot of information coming to your mind. So please go practice. Please just stay tuned and be with me until the end of the video, because each and every one of these patterns are mandatory to be known, and you have to find them correctly on the chart, because in between all the candlestick patterns, these are the most important ones. So please stay here, don't go anywhere, stay focused. Let's see what they are all about. Let's starting off with bullish and bearish kicker. Again, if you don't know the meaning of the words that I'm using now right at the moment, like bullish and bearish, whatever I say, I made a video previously and I leave a link above here or down in the description. Or if I want to use a word or a phrase which I haven't talked about yet and I don't want to talk about at the moment, I will let you know that I will talk about it soon later. So bullish and bearish kicker, these kind of patterns, you cannot find them. You can, but they are so rare in the cryptocurrency market, as we can say, they're almost not there. But you can find them a lot in stocks, commodities, forex market, or any other market, rather than the cryptocurrency market. This pattern consists of 2 candles, with the first being a large candle in the opposite direction of the trend, followed by a smaller candle in the direction of the trend. A bullish kicker indicates a bullish reversal, while a bearish kicker indicates a bearish reversal. Now, let's go to the chart and make some examples. Well, as you can see, there is a really beautiful bullish kicker happened here, and this is S&P 500 index 1 hour chart. How to set a chart like this, I talked about it previously, and you have to check my previous videos, which I'm gonna leave the links down in the description. But the other thing which is really important, which I talked previously in previous session, is that we only can rely on these candlestick patterns. It doesn't matter if it is a single candlestick pattern, 2 candlestick pattern, or even a 3 candlestick pattern. They must occur on support and resistance level, or let's say supply and demand zones, which we can rely on them. If they happen in between the way, they are not reliable. So, how to find the support and resistance levels? I made a dedicated, complete session for this, which I'm going to leave the link above here. You can check it out first, because if you don't know how it's get done, then there is no use for you to watch this video or any of the upcoming videos. That is the fundamental basics. So here we have our support zone, and this is our bullish kicker. Why kicker? Because the open of our new candle has a distance kicked off from this area from the close of the previous candle. So it's the previous candle kicked the new candle off, and this is why we call it a kicker. And then it made the price to go up and hit this resistance level here. Let me change the color to red. Yeah, beautifully went up, and we could go long or take a long position here and take our benefit and profit out of the market. Yeah, you can see it was like 3.72% profit with 10x leverage. It means timing our profit, which I'm going to talk a lot later on in our trading strategies and money management, risk management. Don't worry. But as for now, let's make it easy. If we used at least 10x leverage, it was like 37.2% of profit, which is a big wow. in this case. So here's a really good example of a bearish kicker. So let's first draw our support and resistance levels here. So this is our resistance level, which made the price to bounce off and go down. And this is our support level here. And let me change the color to green for the support level. And you can see this bearish kicker here. And if we took a trade, a short trade, or go short, or let's say go selling off the asset, and we took a trade down to this support area, it was like, you can see 7%. If you use 10x leverage on this trade, oh my God, it was 70% profit in a matter of hours. Or let's say, yeah, it was 5th of May 2022 at 4:30 p.m. and then it hit our target in as you can see down here on the chart on Wednesday 11th May 2022 10:30 p.m. And in this period, in only, let's say, 6 days, in a week, you took a profit of 70%. So if you've entered with a volume of $1,000 into this trade, just like that, you had $700 profit. Who can make money out of $1,000, 1,000 bucks like that? I don't think so, anyone rather than a trader. So let's get to the rest of the stuff which we want to talk about. Next one, which is really reliable, and we're gonna use this one a lot during our trading course and in our trading career, and you can use this as a strong reversal signal in any market, any time frame, any type of trading. This one is so strong. Are bullish and bearish engulfing candle patterns. This pattern consists of 2 candles as well, with the second candle completely engulfing the first. A bullish engulfing pattern indicates a bullish reversal, while a bearish engulfing pattern indicates a bearish reversal. Now let's go to the chart and make some examples. Let me draw this support level here. And then I must wait as a trader for the right time. You know, as a trader, you must be like a hunter and wait for the right moment, right time to enter a trade. So when I could take this trade, when was the best part? To wait, for example, let's say I'm only want to wait as a confirmation, not only the signal that I want to enter a trade. These are not signals. These are only confirmation signals, not any ordinary signals. We are not about to trade with them. Keep that in mind. Mark my words, that's not going to work. I'm waiting for an engulfing. What is an engulfing? As I told you previously, here you can see it beautifully. The wicks, the shadows are not important. There must be a candle with a good body. When I mean a good body, it means, it shouldn't be a doji candle like these here. But there must be a good body. By good body, I mean a healthy body like this. It shouldn't be a doji. For example, this one here, you cannot call this an engulfing because this is a doji. This is not even a body. But in this case, it's a healthy body, and then it's covered completely by the next bullish candle, and it's causing the price to go up. Did it go up? Yes, it went up beautifully. So if I wanted to take this trade, and let's say we encountered here as our resistance level. Why? Because there are so many hits on this point, and how to determine them, again, you have to watch my previous videos, which you can find in the description. But if I wanted to take a trade here, let's see, it is Bitcoin 1 hour time frame. So I want to enter a trade here, set up my stop loss here, and then take a trade up to here. And let's say how much profit was it? Oh my God. Look at that, 11.51%. If you only use 10x leverage, it means timing our profit and of course loss, which I'm going to talk about later on, don't worry. But just simple story. If we use 10x leverage, it means 11.51% 10 times bigger. Go take your calculator and see how crazy that is. It is such a big wow. Let's make an example for now at the moment for bearish engulfing. Before making an example there, maybe you ask yourself, oh, I see lots of patterns happening here. Why they are not working? First, I told you before, you are not supposed to only trade with this. We have to combine a lot of information before we enter a trade. It's like, imagine yourself as a sniper. You want to hit your target. You have to calculate the wind. You have to calculate the sun orientation, your target's movement, if it is still, if it is moving. And our target here is always moving. It's not still. So you must be a pro in being a sniper. So even I'm going to teach you later on, you have a strategy for trading. It's called sniper trading. But imagine yourself always as a sniper, as a hunter. So you have to determine lots of things. That was the first reason. The second reason is that maybe you are not finding the support and resistance levels properly. Again, I insist you go watch that video about that. I'm going to leave the link above here. And it is really mandatory. You must know how to draw them. I only taught one method how to find them. And during this course, I'm going to teach you crazy amount of numbers of how you can determine support and resistance levels, or let's say key levels for the price. Let's get back to our example here. Let me draw this resistance level. And as you can see, we have a beautiful engulfing here. As I told you, it shouldn't be a doji. So it's not a doji. It is a healthy body. And then it's covered by the next candle. And the next candle, if you can see it here, if you watched my previous video on single candlestick patterns, we have two bearish spinning tops here. And then it comes right after that, it comes in a bearish engulfing. So it's a strong signal. And you can see that this is the support level here. Let me change the color, put it to green. And you can see it beautifully. It had a sky fall. It was like a, stone from the top of the mountain. And if you took a short trade here, you wanted to take profit out of here, oh my God, 6.443. Forget about the rest, 6%. 6% is crazy. If you time it in 10, using 10x leverage, it's like 60% profit. Who can make that money? Except for you if you become a professional trader. Next one is the Haramis. Bullish and bearish, of course. This pattern consists of two candles, with the first being a large candle, as you can see in the picture, and the second being a small candle with the body of the first. A bullish Harami indicates a potential bullish reversal, while a bearish Harami indicates a potential bearish reversal. Now let's go to the chart and make some examples. So what is a Harami? I told you before, but why we call it really Harami? Because it's like a pregnant lady. If you just imagine this as a candle here, so this is our bearish candle going down, then we must have, let's see, it has wicks like this. The next candle must be within this candle, but the main difference with the engulfing is that in engulfing, this right candle must be bigger than this one, and the wicks was not important. But in Harami, all the range of the next candle must be within the body of the previous candle. So in this case, we have it exactly here. If we draw our support level here and we wanted to take a trade here, all the range of this candle is within the body of this candle. So we call it a Harami. So if we wanted to take a trade here, we should have done like this and had our stop loss here and go long like this, and it was our target point here, and just like that. And the bearish Harami is exactly just opposite like that. I don't want to waste your time anymore. You can go find them for yourself and practice as much as you can. Piercing line. This one is only bullish, and it is not like the previous ones that we say bullish and bearish. So this one is only a bullish signal, which reverses the price, make a reversal in the price in the market from a support level to the upside. This pattern consists of two candles, with the first being a large bearish candle, the second being a bullish candle that opens below the previous close. but closes above the midpoint of the first candle. This pattern indicates a potential bullish reversal. And of course, you can find this not in the cryptocurrency market, and you can find it in other markets. Next one is dark cloud cover, which is exactly opposite of piercing line. And again, you can find this only in any market rather than cryptocurrency market. This pattern is made out of candles, with the first being a large bullish candle and the second being a bearish candle that opens above the previous close, but closes below the midpoint of the first candle. This pattern indicates a potential bearish reversal. Piercing line and the opposite of it, the dark cloud cover, they are only occurring in stocks, commodities, forex market. I don't want to tell you that they are not important. They are, of course, important, but you can go find them for yourself as a challenge, accept it from me. But you must search for them in lower time frames, like 5 minutes, 15 minutes, even 1 minute. See if they cause the price to reverse from a support or a resistance level. Tweezer's bottom and tweezer's top. This pattern consists of 2 or more candles with equal lows. Tweezer bottom or equal highs. Let's say tweezer top. A tweezer bottom pattern indicates a potential bullish reversal, while a tweezer top pattern indicates a potential bearish reversal. And why we call them tweezers? Because they look like a tweezer. Now let's go to the chart and see some examples for these as well. Okay, here's with the tweezer's bottom, which makes a reversal of the price from a support level. Let me draw this support level here. And it makes the price to go up and hit another resistance level. Let me draw this too. And just like that, you can see this is our tweezer's bottom, which is a bullish signal. If we took a trade here, you can see both shadows, both wicks are at the same level and both bodies are at the same level too. It's exactly like a tweezer. And then from here, if we took a long trade, we put our stop loss just here. How to do that, don't worry, we're going to talk about that later on, just in near future. And then if you took this trade up to here, it was like 3.35. If it makes it 10 times bigger with a 10x leverage, it was like 33.5% of profit, which is crazy good. The tweezers top is exactly the opposite. Just find them on the resistance areas for yourself. Feel free again to ask me any questions pops into your mind. In conclusion, we can add up these 2 candlestick patterns to the previous ones, the single candlestick patterns. And by combining them with finding really good support and resistance areas, or let's say supply and demand zones, and then combine them with other information like chart patterns. If you haven't checked those videos, I'm going to leave a link above here and down in the description. And you can even check the playlist of my channel. And go check them out too. And in the end, we're gonna combine all of this information to come up with plan A, plan B, plan C, all the way to Z, trading strategies for different types of the market. Because let's make an example. You cannot always drive your car with only one sets of tire. You need winter tires, you need summer tires in order to use them in a specific time, in a right place, right time. Here, in the markets, financial markets, especially cryptocurrency market, with various times that the market goes volatile or goes crazy, and the variations are really high. You need to have different sets of tires. You need to be prepared for different scenarios. So those means different trading strategies. And we're going to come up with them combining all this knowledge together. So this is the reason I'm trying to give you information one by one and not making them so long or make them so complicated. And you have to practice and ask me any questions comes into your mind. Feel free, don't be shy. I would be really happy, and that would be my honor to answer you one by one. So if you like the content that I'm making for you, please just like my videos, hit the subscribe button if you haven't done it yet, and share my videos or my channel with your friends so they can take the benefit out of this free course of how to become a trader, of course, a professional one. Thank you so very much. Stay tuned. Next session, we're going to talk about 3 candlestick chart patterns, and that's going to be interesting too. Bye-bye.